All right, welcome back to Talking Stocks and Happy New Year, everybody. I just realized we recorded our last podcast on December 30th. So here we are in the new year. We've got lots to cover. Todd, Happy New Year. Hope you're doing well down there.
Happy New Year to you too, Joe. I see you're at a new location. Are you getting more
Yes.
skiing in?
Yes, exactly. Another day, another ski mountain. That's the way I roll. But gotta keep going with the routine of the weekly podcast. So here we are once more.
I love it. You can, that's one beautiful thing about the technology that we have today is it allows us to record our show from anywhere and people to work from anywhere. Welcome to 2021. I don't think anybody's having a hard time remembering to write 2021 this year. Mm-hmm. More than happy to get rid of stuff writing 2020.
For
so
sure.
Welcome to 2021 and all our listeners and viewers if you're on YouTube. I hope that everybody has a healthy, safe, and happy 2021.
Absolutely. And there's plenty of reason to be optimistic. We were talking before I hit record about the massive amount of stocks that are breaking out into new highs today on some frankly political news. Now we're obliged to bring it up. We'll try to keep the politics out of it. But it's very important news, and it means a lot for some particular industries. So, Todd, we were talking, again, before I hit record, specifically about solar and cannabis, which are both breaking out in pretty big ways today. So whatever you want to start with, fire away.
Yeah, well, I think that, this goes back to something you and I started talking about, Joe, months ago before the November elections. And there were a lot of people who had very firm beliefs on what they thought that the market would do based upon a particular outcome in the election. And, in a large respect, that whole idea of let's fade the market if the Democrats win the presidency really didn't pan out because we had a wonderful Q4. And we oftentimes end up seeing that. I think that when it comes to politics, you have to be very careful, but not about controlling your biases. And then as part of that, when you start to see things go against you, let's say that you have your plan and you say to yourself, okay, I expect, and we're talking about Georgia this week and the Senate elections and what it means for control of the Senate. So they have two runoff elections that are happening today, unless you're living in a hole, you don't aware of this. And depending on the outcome of that, you could end up with Republicans maintaining control, Republicans, Democrats splitting control, or Democrats having control of the Senate. And of course, if the Democrats have control of the Senate, then they would have all three branches. They would have the House, the Senate, and the presidency. And of course, people coming to their own conclusions on what that may or may not mean. And I think one of the things to remember there is just that, okay, you can have your plan and what you think may end up happening, but listen to the market. All right, the market is going to tell you whether or not you're right or wrong. So let's say that you had the idea that, okay, if Georgia goes Republicans, I'm going to, short cannabis stocks, I'm going to short solar stocks or whatever. Okay, well, let's say that the Republicans had won and, those sold off initially and then started to gap back up higher. Well, you wouldn't necessarily want to press that bet, right? You would want to say, okay, you know what? Maybe they're looking forward and saying that no matter what, there's a secular change happening in this country that is going to, continue. And maybe it won't continue as fast, but you'll still end up having more states approving, pro-cannabis laws and et cetera. So anyways, I think that's just a long kind of backstory. Just make sure that you're keeping your political biases in check when it comes to your investment decisions. So as it stands today, and we're recording, Joe, probably around 11 o'clock here on Wednesday, it looks like the Democrats have had at least one of those. And I think the other one, the Democratic candidate is ahead, but they haven't called it yet. So unsurprisingly, Joe, we're seeing cannabis stocks rally sharply higher. And we're seeing solar stocks and EV stocks run significantly higher. The tell will be, can that initial gap up continue? So if, for example, and let's bring up, what I'll do is I'll bring up on my screen Joe, I'll try to bring up some charts in a second here.
Sure.
And we can take a look at a couple of these things because I think it's kind of interesting. So listeners, if you're on Spotify or whatever, we'll do our best to walk you through it. If it turns out that you're on a computer, you can watch us on YouTube as well, and you can see these charts. And, you know, we were talking before the show, Joe, just about, I think you were saying that you have a small position in this one.
I do.
Yeah, the ETF alternative harvest. And, you know, that's up 9% today. And the volume has just been increasing steadily the last 3 trading sessions as people have started to put those positions on, anticipating that maybe we would get a faster path to legalization if Democrats do end up controlling the Senate. And you've got that bust out to the new highs. And then the other one I want to bring up to you, Joe, is MSOS, which is another ETF in the cannabis space. And this one purports to be the only true U.S. Play as far as ETFs are concerned. So it's geared not necessarily as much tilted towards Canada as maybe MJ and some of these others, but excuse me, to the U.S. market. And you can see that's up over 10% today with that big gap as well. And then also just to give our viewers a little taste, there's the TAN, the Invesco Solar ETF, which is also gapping up and breaking out to new highs on high volume the last few days.
Yeah, absolutely. It's going to be an interesting 4 years. You know, it's with a 51-49 Democrat majority in the Senate. Like I don't know if it's probably not safe to say that we'd have, you know, federal cannabis legalization passed in the next 4 years. Certainly possible, but I think it is safe to say that the cost of solar is going to continue to plummet, and the government incentives are going to increase under the new administration. So before
and solar, Joe, solar is just an interesting area. I mean, we've been really good on solar. You know, every week we do a screen that shows our members free trial in the links below. It shows our members the strongest sectors, the strongest industries, and then stocks within those sectors and industries. And solar for months has been incredibly strong. And, you know, one of the stocks that's screened really well is Enphase, ENPH. And that one is one to bring up. Let's take a look at a couple of those, Joe, just so we can see the individually strong. So I'm going to go ahead and share my screen again. So you look at Enphase, which is being added to the S&P 500, and you can see that looks very similar to the TAN with that gap up.
Yep.
Right. And then if you go over to my, I keep a spreadsheet going with all of our current scores. So, you know, I can go over here and I can do a quick solar, go down to solar, and I can see some of the other strong solar stocks include SunPower, SPWR. And that's bouncing right there where it should off the 21-day support. So that's one to keep in mind. And another one would be, I like First Solar, FSLR.
Yep.
Again, bouncing off that 21-day. And 70% year-over-year growth. Jeez.
That's remarkable.
To your point, Joe, excuse me, I got like a frog in my throat today.
That's okay.
To your point, Joe, just I think that a lot of this is technology.
Yeah.
You know, as technology and, you know, you have favorable regulations and financial support, economic incentives that the government could use to push along the adoption of technologies like this. You've got technology driving down the cost of installations. And then you've got rising costs for other alternative energy sources, which again makes solar a little bit more attractive. So I think that, you know, one of the things that I would be doing if I was an investor, I'd be looking at those really high scoring like Enphase, and I'd be saying to myself, you know what, usually you have a gap up and then it sort of trails down a little bit. If you start to fill that gap, I think you could be a buyer there of Enphase. And that would be somewhere around, if it gets in the 185 range. So, you know, we pull back over the course of the next few weeks. I think you could do that one. Yep. I think it's a little bit easier to do, oops, you gotta pull up the right symbol here. SPWR. A little bit easier to do SunPower now because, you know, it's bouncing off of that. You can take that and run that, and then maybe run a stop loss, protect yourself below the 20 to 21 day moving average. And then, same with those marijuana stocks. I mean, if you weren't trading at the open today in milliseconds, right? Like all the algorithms that are set up. I mean, this is what happens, Joe, right? People come up with these plans. They have this idea of, okay, what's going to happen if this happens, if this happens, if this happens. So they program the trade in, and it executes in milliseconds of seconds once they click the go button or whatever happens to be the trigger. So, I mean, if you weren't the one that gets on the open there, maybe you get canopy growth to pull back a little bit towards these 28, 29 range, and that would be a slightly better entry. You don't need to chase these things. Stocks always give you, I want to say always, stocks mostly give you entries in them over the course of a year. Don't worry about missing a trade. There's always another idea.
Yeah, absolutely. Going back to solar briefly, I believe, correct me if I'm wrong, but I believe you also tweeted about Solar Edge this morning, which is another one. I think we may have talked about it on the show at one point, but also probably a similarly bullish outlook now, if I'm not mistaken.
Yeah, I happen to own that one personally in my portfolio in Solar Edge. It was up a little over 10% earlier today. It's pulled back a little bit. It's only up about 7 or 8 only up 7 or 8%.
Only, yeah.
Right now, former high scoring stock currently scores neutral. So we're going to want to see how those scores play over the course of the next couple of weeks. And actually, that's a good point, Joe. I mean, when you're using our research is an idea generation machine. So it's spitting out continuously ideas that we should be spending time learning and figuring out, and which one looks better at this point versus another one that doesn't look better at this point. I don't sell a stock simply because the score no longer scores at the highest of the list, right? What I use is this machine to funnel down this large universe of names to a more actionable data set of names. Once I've done my due diligence and figured out which stocks I want to own, then I'll look for my entry points. And that's what happened with Solar Edge. So it was high scoring at one point, put it on my watch list, got my entry point, executed, bought it, and I added that to what I call my forever portfolio. Yep. So I'm using that term loosely. All right. I mean, nothing is forever, right? I mean, Eastman Kodak, you could argue back in the 70s was a forever stock, right? So I'm using that term loosely because it's the easier descriptor though of a stock where it's a disruptive technology disrupting a very large market, where I think that the legs on it could be multi-year, right? Absolutely. And then of course the other way I categorize some stocks I put on will be rentals, and by rentals I simply mean there's a catalyst to some short-term event. Once that catalyst ends or whatever, I'm gone.
Yep. Yeah, and before we shift gears here, I think it's important to put Tesla in that basket as well of these kind of political play stocks. Obviously, if you don't know, Tesla is not only in the EV market but big into the solar market as well as energy storage. So I would think that the tax incentives for buying electric vehicles will be reinstated and increased in the next 4 years. So that's something to watch as well.
I know, Joe, we talked about in the show how I pared it back after the S&P 500 inclusion. And sure enough, for a very short period, it retreated. Yes. And now it is re-exerted now on this renewed hope for growing adoption of EVs. And wow, I tell you, 767, Joe, all-time highs.
It's amazing.
As of our recording today.
Amazing. So since I brought up Tesla, we got a viewer question last week. So just want to give a shout out to Pavel B. Thank you for your question. I'm going to read it. He wrote, very important topic you touched on is when to take profits on a winner. This is from last week's episode, should have clarified. He goes on, I guess most of us actually struggle with this one. I'd love for Todd to possibly share his few sells of 2020 for reasons other than became too big of a chunk of the portfolio like Tesla. So this is going back last week when we did our New Year's resolution episode. Todd said that he wanted to refine his sell strategy a little bit more. So Todd, I'll turn it over to you, and you can take that question as you wish.
Right, and also just it's following up on our discussion previously, just about the fact that Tesla had become such a large proportion of my portfolio, and that always makes me a little bit nervous. So I will, like, when I get a forever stock, quote unquote, that ends up becoming a large share of my portfolio, I will trim that back. I will prune the tree, if you will, so that I have a cash available to buy other stocks. I think that's just prudent money management. Tesla still being a top 5 holding for me, it had become an incredibly outsized number 1 holding for me prior to me cutting it back. And I think that the question, or what he's trying to figure out, is kind of like something that everybody's wrestling with, is trying to figure out, okay, well, when is the right time on a rental? You know, like, okay, we got a forever stock, and okay, maybe I'm trimming it because it's become too big. It's affecting my sleep because it's such a big proportion of a portfolio, whatever. But what about on these rentals that you do, Todd? And again, a rental, Joe, I define as being something that's kind of catalyst driven. It's a short-term event, or it might be a cyclical, something like that. And then, you know, there's a few different ways, and you got to find the one that dovetails best with your own personality, right? When it comes to booking trades, selling rentals, it really is, you're going to have to find something that works for you. Otherwise, you're always going to have this feelings of regret, and you'll always be trying to say, oh, I should have held it longer. You got to, once you've settled on your rules, find the thing that works for you. And once you've settled on it, once you click the sell button, move on to the next idea. Okay. Be totally okay with the stock running much higher or whatever. Now, there are a few different approaches that you can take, and I guess I'll share my screen again so that, you know, we can pull up some charts and take a look at some of these different stocks and ways to approach it. So, for example, let's say that, and this is not the case for me, I actually own Coupa as a forever stock, but let's say that you had bought Coupa because of some sort of defined thing and you wanted to term it a rental. It was you're a shorter term position trader on it. You know, one of the things that I tend to do is when a stock goes vertical, Joe, on a rental, that's when I would start to pull, I would sell some. So you've got this vertical move in Coupa, right, where it ran here from, you know, around 335 to 369 in really short order, broke out to a new high, right? You also had that happen, volume was rising, right? So I would take some off on that vertical move. Right. And you got to figure out what's right for you. It may be a third, it may be a half, right? Something like that. Could be a quarter.
Yep.
But a third or a half is probably a good starting point. And you say to yourself, okay, I'm going to take that off. Now, sure enough, oftentimes, Joe, you'll see a stock that'll bust out to new highs, like Coupa did, kind of trend sideways and then pull on back to its moving average. It does happen, especially if it's been a vertical move. So, you know, I think that makes sense to sort of protect yourself. I mean, the temptation is to say, wow, it's busting out to new highs, I should buy more. Well, theoretically, but then you'd have to have like a 1 or 2% stop loss below you, but then you'd be banged down on the stop loss, et cetera, et cetera. So I think that from, you know, a portfolio management standpoint, if you're talking about a very short-term oriented portfolio, then you could say to yourself, okay, if I get a big vertical move in a particular stock, well, let's look at Fubu, which is a Twitter darling that has come back, right?
Yes.
This would be probably the best example of a true vertical that needs to be sold, right? I mean, that's just an unsustainable parabolic move higher. And
right.
When you get something like that, you know, you're not going to be buying here at 60. Somebody did.
Somebody
right?
did.
But you don't want to do that. Right. So you take some off, and then from each chunk down, you have some sort of a risk control. So maybe you say, okay, I'm gonna either take off another quarter or another half if it goes up another 10%, or I'm gonna take off another half or another quarter if it falls more than 10%. You know what I'm saying? So that as it's falling down here, you're booking the gain, you're booking the gain, you're booking the gain. You won't ever get the absolute bottom or the absolute top with a process like this. But what it is it's good discipline, it's good money management. Because the goal, if you want to be in this long haul, if you want to be doing this 20, 30 years out, if you want to survive and not get blown up, you got to stop trying to pick the bottom and pick the top, right? You got to capture the bulk of the move. So worry less about being perfect and worry more about winning. And the way to win long term is to kind of have these disciplines. And again, it's going to be each person has to find what works for them. One of the things that I do, and we've talked about semiconductors a lot, Joe, in the past. This was a basket that's a seasonally strong basket. We started talking about it, I think probably whenever we started doing the show back in September, October, whenever it was, as a basket to own. And, for me, the semiconductors are kind of fall in that cyclical camp, a lot of them, especially the semi-equipment plays, because the book to bill is usually very strong through the fall. It strengthens, and then it strengthens strong through the first quarter of the year. So in those kind of scenarios, I often will take profits when I get up 20%. So that's another rule that you could sort of say. It's just a line in the sand where you say, if I get up into the green, roughly 20% above the pivot where ideally I would have bought, then I'm going to take some off the table there. So there's a few different ways to answer the question. I know I've kind of like jumped around a lot. It's kind of like a garden hose, but I think that what you do is if you go vertical, you sell a little bit on the vertical. And then if you get up 20%, you sell a little bit to protect yourself once you're up 20%. And then as far as controlling your losses, I tend to try and do my entries on pullbacks, and ideally do my pullback at or near support where I can define an exit. And as we talked about on last week's show, I'm looking to control my risk to about an average loss per position of 10%. So, I'm watching some of these stocks, like we put on Seattle Genetics. I bought Seattle Genetics last week. I'm down about 7.5% on that entry. So now it starts to get me a little bit nervous about it. I got to watch it. It's sitting right on its 200-day moving average, just about. So I'm going to want to see it turn up from here to show that, yep, that was a good entry, and I'm going to make some money on this after all. But so I think that you can control the risk on your rentals that way too. Try to enter your positions near support, and then have a defined line in the sand where you're going to say, you know what, I'll take that loss and move on to the next idea, because there's plenty of ideas, and I know I'll have a new one tomorrow that I can get into.
Yeah, that's a great answer. And once again, thank you, Pavel, for the question. If any of you viewers or listeners have questions that you'd like to hear us answer or tackle, please feel free to leave a comment. If you're on YouTube, tweet at us. Todd's handle is @EBCapital. And then the Limelight Alpha handle is Alpha Limelight. So tweet at us, respond to a tweet, comment on a video. We'll find it, and we're happy to answer viewer and listener questions. So with that, I want to shift gears, and this is just one of those kind of spontaneous questions that I was thinking of when I was coming up with an agenda for the episode. But I realized, I don't know how many episodes, it's getting to the point where we almost lose count, but we're like 15 episodes in, and we haven't talked about like analyst ratings really very much. Probably partly because we have our own rating system, but I think it's important to bring up because it enters the news a lot, and it can move stock prices a lot. So two that I noticed earlier this week, yesterday, so Tuesday and Monday, were Tesla and Facebook that got some hikes in their price targets from some pretty notable analysts. And so just on a general basis, I'm wondering, Todd, what is your opinion on analyst ratings and analyst price targets? Are they worth paying attention to, or are they just kind of nonsense?
I think it depends on the analyst in some respect.
Yeah, for sure.
So you have to do a little due diligence. I think there's a website out there called Tip Ranks where you can kind of see what some of these people, what their track record has been in the past. You also have to, there's a few different things of this. So when you have an upgrade or downgrade, it usually it's a one-day event for the stock price, right? So, for most investors, do you care? Well, only if it's knocking the stock down and giving me a nice entry, or it's popping the stock and giving me opportunity to on a rental, book some of my profit, okay? From a longer term perspective, for most investors that have done their due diligence, if somebody downgrades Tesla or upgrades Tesla, does that really change your belief in whether or not electric vehicles are going to, increase in market share to the total amount of cars that are sold? No. So you have to almost think about in a few different ways. Okay, what's my time horizon for the stock that I bought? And then does what they're saying have anything to do with the catalyst, the reason that I picked up that stock in the first place, right? Because oftentimes, the person who downgrades, well, if the stock pulls back, they're going to upgrade it again next time it starts to run, or whatever, for whatever reason, things change, right? So then are you going to want to have sold it because Bank of America told you to sell it? And then, who's to say that you're going to end up buying it back? You don't know when you're going to buy it back, and then you could miss out on a big run. Like how many people it always comes down to what is your time horizon? What is your catalyst? What is your reason for buying? So I don't personally use analyst ratings for anything. I personally I recognize that yes, they're going to move the market in a very short period of time, and maybe that creates some sort of an exploitable opportunity for me. But I don't, 9.9 out of 10 times, I don't look at the analyst's decision to upgrade or downgrade and then make a decision on my own portfolio based on that.
Yeah. Just to add on to that, I would say so for those of you who use Fidelity as a trading platform like I do, Fidelity has kind of an objective way that they gather a bunch of different analyst ratings, and then that gives a score of like how bullish or bearish the stock is trending. I do look at that on an overall basis. So it's like it's a 0 to 10 scale. So 10 would be extremely bullish and 0 would be extremely bearish. I do somewhat pay attention to that, but also sometimes I've seen I'll find a stock that scores really high in our research and look it up on Fidelity, and it has an overall, I forget what they call it, but it's basically an average analyst rating of 0.5, which is incredibly bearish. And then the price will spike. So it's definitely, just adding on to what you said, and not to get repetitive here, but it's something to look at, but it's definitely not something to rely upon, I would say.
And I want to amend my answer a little bit.
All right.
Because we do incorporate forward earnings estimates and beats into our scoring model, right? So we're less interested. I'm less interested in actually the buy, hold, or sell rating. But what I am interested in is whether or not they're increasing or decreasing their forward earnings estimate, and in relation to what the track record of the company has been in beating, right?
Yep.
So if you've got a company that's been beating four out of the last 4 quarters, and you've got estimates that are rising, forward earnings estimates that are rising, that's a good combination. So I will pay attention to the actual modeling that they're doing. So the modeling for earnings. I just don't pay attention to where they say buy, hold, or sell.
Yeah, same here. So I think at this point, it's probably time for our weekly, as our, I guess it's our new favorite word, smattering of stocks across the board. So take it away, Todd. What's piquing your interest this week?
It's the time for the smattering.
Yes,
right?
It is. It's smattering o'clock.
A smattering o'clock. Okay, so yeah. So I thought that I'm going to go ahead and share my screen again. Joe, give me a thumbs up if you can see it.
All good.
All right, great. So I'm going to just swap over. We'll start very top level, take a look at where the sectors are for large, mid, and small, and kind of go from there. Because we did roll every quarter, we roll to new calendar quarter seasonality for our stocks. So once we've got our stock scores individually, then we aggregate them for the baskets for sectors and for industries. And that helps us figure out which ponds are most likely to produce the most fish if we go and we fish in them. So basically, these are the areas where you're going to have the greatest luck of finding alpha. Can you still find alpha in these low scoring baskets? Yeah, but it's going to be harder, and you're not going to have the tailwinds of that sector strength. So in large cap, following the roll in seasonality, financials, technology, and industrials, right? Well, financials and industrials, Joe, as you know, we've talked about on the show before, have been strong for months, so that's no big surprise. Technology has been bouncing around in the neutral area and re-exerting here now this week. So that's interesting and something to keep an eye on. Mid cap, utilities, but it's a relatively small grouping of only 5 stocks. So, I mean, you can't really, weight that too high. But again, industrials, technology, consumer, and some basics. And then in small cap, consumer, technology, services, industrials, financial. So, I mean, you can start to get the idea. So you basically want to be, all right, I'll be tilting towards consumer, financials, and technologies on a sector basis. Then you can go back to the industries and you can say, well, okay, in large cap, if I'm interested in technology, where should I be focusing? Drill down some more. Specialized semiconductor, electronic components, semi-equipment and materials, semiconductor broadline. We notice a trend here, Joe.
Yeah, this is almost the semiconductor show at this point.
Right. I mean, so again, still very, very strong and re-exerting. And then maybe less interested in something like communications equipment or software application. And you can do that again, looking here in mid-cap, semi-equipment, software application, communications equipment, scientific and technical, and then going down here and you can say semi into ICs, electronic components, information technology. So you can kind of be drilling into those areas for your winners. Now, you can also say, Joe, like for example, energy stocks don't score great, right, as a sector, but we talked about energy on the show back in December. We highlighted some stocks that have been huge winners, right, in the basket, and we are seeing certain industries now strengthening. So the sector overall still it's meh, but if you look at large cap, oil and gas drillers and oil and gas equipment and services stocks are a place to focus on. Look at mid cap, oil and gas equipment and services, oil and gas exploration and production. And then if you look at small cap, you can say, well, maybe I still want to avoid everything except for oil and gas equipment and services. But it's definitely the service providers and energy that you'd be focusing on for the most part in mid and small cap. And then maybe as you go into some of these other areas, you could take a look at like some of these other stocks, which we'll pull up in a minute. So that was kind of like just to give you a little bit of background on sector and industry trends that we're seeing right now in the research. Now let's get into the smattering, the official smattering.
Here we go.
All right. So one stock I wanted to highlight was Cree, right? Cree Inc., right? So Cree, you may know for their LED lights and the stuff. They also, are in that semiconductor space, which we like, right? They also produce, those LED lights for hydroponic marijuana growth facilities. So not too surprising that the stock is up nicely today. So this is a stock that you might want to have on a watch list. If you could get a pullback to 104, 105, something like that, maybe that's something that you'd want to take a swing at. We already talked about Enphase in the solar space. I also wanted to bring up a stock, Lumentum, which is a stock that I own, and we've talked about on the show again in the past. Lumentum, one of their businesses creating the sensors that are used for 3D sensing. So if you hold your phone up in front of you, it's able to unlock based on that. They also do LiDAR, which is something that's going to be deployed in autonomous vehicles. And you can see busting out here. And the volume really it's just pretty light, just steady, little cell volume, not big there. I think you're going to see revenue year-over-year growth accelerate from this 1% level. And if you look at the earnings, you got 14% earnings growth expected in 21 and another 11% in 22. That's a stock that I think you can take some of. Going back to the whole Georgia election trade, maybe Kansas City Southern, which does a lot of cross-border rail activity between Mexico and the US, is one to consider. And you can see that that's breaking out to new highs, high scoring in our work. Taking a look at those energy stocks, we talked about Diamondback Energy back in December. That continues to motor higher. I would also just highlight some of the offshore plays. This is Oceaneering International, OII. I think that's one that investors can be taking a look at right here in that space. Again, from the Georgia play, Constellation Brands, a beverage maker, liquors, wines, beers, including Corona brand. And they also own a big stake in Canopy Growth, which we showed that chart earlier in the show. I want to pull up Mimecast as an interesting stock. This is something that I tend to look at, Joe, personally. I kind of like these setups where you have a stock that's busted out, new high, growing, double digits, 19% year over year growth, now profitable with potential for significant, what's that, 84%
Wow.
EPS growth in 2021. So you've got that bust out, right? Then you've got this nice little pullback all the way back to that pivot level where it broke out, here at 50, 51, somewhere around there. And you've come all the way back to that level now. Not really much going on here, volume that scares me. I would start to take a position in Mimecast right about here and see whether or not we start to get that reacceleration back up to new highs. So that was one I also wanted to pull up. And, maybe Little Fuse is another one. Oh, type in the right symbol, LFUS. Little Fuse, we've talked about on the show many times over the last few months. They make the fuses that are used in the electrification of everything. And you can see that busting out today on the Georgia news as well, as people start to think, okay, well, maybe we're going to have maybe this technology forward, electrical vehicles, autonomous driving, all that stuff, and benefit from that. So that's a smattering of stocks for you, Joe.
Yeah, that was a great
watch list.
smattering. I'll tell you, I always take notes of the stocks and the general topics we've covered over the show. And this is definitely like my fattest set of notes I've ever taken. So we've got a lot of great ideas this week, and I'll make sure to put all of those in the show notes and on Twitter as well for all of our viewers and listeners. But yeah, I think the general theme for 2021 so far, at least, is some optimism.
Yeah, and we talked about indicators. Maybe it was 2 weeks ago, Joe. The January barometer is one to watch. As goes January, oftentimes goes the year. So the keep an eye on the performance throughout the course of the rest of this month, and let's see how it plays out from here. And then obviously, I loved having the listener questions. So if anybody has any questions they'd like us to attack on a future show, please write them in the comments or tweet at us.
Totally. All right. So with that, we'll leave it at there. Hopefully my next concern is, can I get this uploaded on this internet up here? So fingers crossed. We'll see. And we will certainly see you next week, one way or another. So take care, everybody. Stay safe.